Indeed, thank you.
Thank you, Nicole.
3 S&P 500 stocks were higher
Just 3.
today.
Ow, that's painful. Ooh, yeah. I don't want to hear it.
Okay, even before the disappointing jobs report, there's something you don't hear every day. Starting the downward spiral while President Obama tried to put a positive spin on the disappointing jobs numbers, Hungary is telling it like it is.
You know, who knew, Hungary, Liz, that we would have gotten this news? The Prime Minister's spokesman saying it's clear that the economy is in a very grave situation. I don't think it's an exaggeration at all to talk about a default.
Oy vey, Mike Norman.
By the way, I have the right to say this because I'm half Hungarian, and you know, I always tell it like it is. It's just in our nature. Okay, look, he told it like it is because Hungary faces a situation where basically, even though they issue their own currency, they borrowed in euros, and they don't have the printing press to euros, so they're really in a tough spot. And they do run the risk of defaulting on their external debt. We don't have that problem here. The United States debt is denominated in dollars. We issue the dollar. We are a currency issuing nation. We don't have it. It's apples and oranges. We keep hearing this comparison, Liz.
Wait.
It doesn't apply.
Wait. Hang on a second. Fed Chairman Ben Bernanke has testified time and again before Congress, and he has said this: if people lose confidence in our fiscal situation in the United States, then we cannot control our interest rates. So what say you to that?
Well, first of all, how are you going to lose confidence when the government, month after month after month, makes good on its obligations? That's a confidence-boosting activity, isn't it?
They're going to make good on it by printing money, correct?
Well, it's the printing of money is merely the crediting of a bank account which fulfills an obligation. Somebody holds a bond, they turn the bond in, they redeem it, their account gets credited. That's a confidence-boosting thing. It shows you that the United States is not going to default, and because we pay in our own currency, we always have the ability to pay back. Always.
Mike, what about this? And let's just really look at this from 30,000 feet. Hungary is saying what Greece said several months ago. Oh, by the way, the previous administration lied about the deficit. It's worse than it is. Hungary's saying that now, too. How many more Hungarys and Greeces are in the EU right now?
They're all Hungarys and Greeces, Liz, because none of them, including Germany, is any longer a currency issuer. So ostensibly, you can see this, migrate all the way to the big economies.
Look, we saw it today. Germany with Hungary.
We saw it today, Liz, the CDS, credit default swaps on France, second largest economy, get hit pretty hard.
Right, wait, Mike Norman, come on, let's be real. You can't equate asset-rich Germany with a Club Med country. You can't. All of the Eurozone was built on the AAA rating of Germany. That's how the Eurozone survived, on Germany. Germany is not like the rest of the Eurozone.
I beg to differ for the following reason. If Germany is called upon to back the debts of the peripheral and the weak nations, then ultimately that does affect Germany. And since they're no longer a currency issuer, they can run into debt trouble as well.
I would like to point out something that Mike Norman told our Bulls and Bears viewers, I want to say now 5.5 weeks ago. He said, watch out for this euro. It is going to continue to go lower. Ticker symbol DRR. I don't know if we can pull that up. Dog Rover. I'm really bad at that. X-ray Delta. DRR. When you recommended it, it was at 50. It is now at 58.
Below, actually 50. Yeah. It was quite a bit below, but I've been here.
Do you see it going to 84 cents where it was in 02?
I see it going to parity. There's nothing to stop it. If nothing changes, if the situation remains as is, yes, Liz, it can go back down to 80 cents or even below. There you go.
This is double euro short, where you could bet against the euro, and that's what you recommended and would have made investors money if they listened to you.
A lot of money.
A lot of money.
Look at him, he's like a lot of money.
Well, what's your recommendation today?
My recommendation is I think there's going to be a much better buying opportunity in the stock market. I think we are going lower for the simple reason that I really don't think that policymakers understand the problem.
Would you buy here?
I would not buy here. And I've been saying this now for weeks. I said the market's going to go down below 10,000.
All right. Mike Norman, Chief Economist, John Thomas Financial.
Watch that
really
firm,
appreciate it.
the next Goldman Sachs.
You're
but a good
Goldman Sachs.
I'm a chief. I'll wear my feathers next time. I'm a chief economist.
Let's go to Adam Shapiro. He's in the newsroom for today's